Look at the futures. It's a tearaway run there too, 200 points higher. And by the way, we're already at 21,200 on the Nifty futures. And it's interesting to see that not just the large caps, but the broader markets as well are continuing to hold out. Look at the move on some of the broader market consistents. You've got a Manappuram, which is higher by 5.25% right now. Emphasis, which is scaling higher 5%. Coforge, Sale, Birlasoft. These are all names which are looking very, very smart indeed in trade.
All right, let's move right on then and focus in on DOMS Industries. Santosh Rasiklal as well as Rahul Shah, the CFO of the company, both joining in on the show. Thank you so much for taking time out. Let's delve a little more then into the business and talk a little bit about what exactly the fundraise will be used for and how you're looking at growing the business, because there's been a stellar retail response.
Thank you very much for having us here today. So basically, post this last 3 years, I would like to take you through a little bit of what we have done. 2021 was the year where we was an affected COVID year. Still, we were able to do around 400 crore out of this year. Following to this, 2022, we were able to do around 680 crore from this year. And in 2023, we were able to grow at around 77%, reaching to 1,211 crore revenue from year 2023. So basically, today we are operating into around 7 categories. And in the scholastic stationery, scholastic art, paper stationery, kits and combination packs, office supplies, hobby and craft, and fine art categories. And I would like to say that here all the categories have been very interesting and filled with all the opportunities. So we are here looking forward to complement all these categories and take all the advantages coming out of all these opportunities from the existing categories. Plus one, we have a target of writing instruments as a new entry to the new product, where we are looking forward to invest around 450 crores, and out of which we are going to raise around 350 crore through fresh issues, where 280 crore will be utilized for expansion of and production of this writing instrument manufacturing facilities, and the 70 crore from this fresh issues will go for our GCP.
Sure. I also wanted to understand, your EBITDA margins as per the first half in your RHP, they were around 17%, which is higher than most of your domestic peers. And, any one of you could actually come in on that. Give me a margin profile for both pencils as well as the mathematical instruments, and what is the outlook that one can see going forward? The range, if you could just give us that.
So basically, as I said, we are operational through around 7 different categories, and as a very disciplined company, we have always been focusing on working on our operating margins. Moreover, so across our categories, we are operating through a very balanced operating margins. Yes, I would like to confirm that we have been able to grow a little. From 15.4% in 2023 to our H1 of at 16.7%. But this is coming more from the operational efficiencies point of view, and also a very little from probably I can say there is an advantage currently where the raw material prices are at utmost low, and this is the advantage we have been able to get in H1. Still, I would like to say a reference of 2023 is a good reference. We would like to balance.
Very simple question in terms of the factor of China. Most of the stationery companies in the past have struggled because of cheap manufacturing units which have been set up in China. Isn't that a binary risk? What if China comes back? What if trade negotiations they start again? What happens in that case?
So what today we are really, as an industry, we are really confident on is that our efficiencies across these years we've been able to create are much more dynamic. Today, we are. I can say that with a lot of research and development in place, the offerings what we have from our company is much more beyond the expectations of our consumers today. And of course, we all have observed that there is a too much of shift, of our Indian consumers from unbranded things to branded products. So I'm sure that this is really helping our industry, and we really don't fear right now with any of this threats coming from any peer countries.
Rahul, where is the organized versus unorganized market number, Rahul, according to you in this industry? Because there is this nukkad wala in every mohalla. I have fond memories of going to that nukkad wala dukan and getting my pens and pencils. That uncle had 3 varieties, 2 branded, 3 non-branded. What is happening there?
So if you look at the overall stationery industry, it is pegged at around 38,500 crores in terms of market value. Largest part coming from paper stationery. In terms of branded to unbranded, it is about, branded would be about 38% right now. But if you look at, going forward, branded stationery is likely to increase its share upwards of 50%. So this entire shift that is happening from unbranded to branded, plus quality consciousness coming in, plus a lot of importance given by the government to primary education. This is boding well for the industry. We believe that branded stationery, especially in the segment that we are present in, is going to do really well.
What, to your mind, are the base margins in this industry, Rahul? I mean, base margins, 1 or 2% here or there could be a function of raw material, new product launches, distribution launches. For DOMS, what do you think are the base margins irrespective of the volatility?
So, for us, margins across our product categories are something very similar. We work on a mantra that we call, nothing at the cost of margins, nothing at the cost of market. Whenever we feel there are increase in certain prices or certain direct costs, today the brand is strong enough to allow it to pass on to either our consumers or through the supply chain. And so we work on that philosophy, and that's why we said, the margins of about 15.5% to 16% that we did during FY23 is something which we'll be comfortable achieving at.
Both of you, thank you so much for taking the time out, Santosh and Rahul, and helping us understand the purpose of the IPO and how business has been of late.